Well, we finally have the first draft of what Trump calls his one big beautiful tax bill. The problem is that after that draft came out, that there was a committee in the House that had already voted it down. So what we have currently likely will not be moving forward. However, it does give us a framework of what we will see come out. So the things that we'll go through in this video are what we're currently seeing. It's not made law yet, it's not in the bills yet, but it does give us some direction as to where things are headed. So let's go through some of the things that they are doing. So high on Trump's list of things that he wanted to have happen was to extend his Tax Cuts and Jobs Act from 2017. One of the big provisions of that bill was that it made all of the tax brackets reduce down to lower rates. For example, the top tax bracket before that bill was 39.6%, and Trump lowered that down to 37%. All the brackets were lowered. A good example is the 15% bracket was lowered to 12%. So everyone was paying less tax under these lower tax brackets. Those brackets were all set to go back to the higher tax brackets at the end of 2025, going into 2026. So is what we're seeing right now is that they're going to extend those lower tax brackets to keep taxes lower for everyone. Another thing that was going to happen was the standard deduction. If you remember, you probably don't, but the 2017 Tax Cuts and Jobs Act doubled all of the standard deductions and caused more people to take the standard deduction rather than to itemize their deductions. That provision was also set to go away at the end of 2025, which meant that the standard deductions would have been cut in half, which also would have raised taxes on people that otherwise would not be able to itemize. The good news is that they are looking at keeping those permanent. You know, instead of having that sunset at some point, that will be made permanent, and it will so that we will never be faced with this being cut in half again unless some legislation is made. Same thing with those lower tax rates. Those lower tax rates were automatically set to sunset at the end of 2025. Those have now been made permanent, so it would take an act of Congress to change the law going forward if they wanted to change those. The child tax credit for those that have children. Before the 2017 Tax Cuts and Jobs Act, the child tax credit was $1,000 per child. The Tax Cuts and Jobs Act doubled that to $2,000 per child. So now, with the expiration of the Tax Cuts and Jobs Act, it's set to fall back to $1,000. But the one big beautiful bill is pushing that back up to $2,500. So not only is it pushing it back up to what it was, the $2,000, is giving an extra $500 on there to be $2,500 as a child tax credit. The qualified business income deduction is probably one of the bigger winners here. That was also set to sunset at the end of 2025. And now that is being made permanent and increased to 23%. So that's really big news for business owners because they'll get a bigger qualified business income deduction. And probably one of the biggest, most anticipated parts of this bill for business owners was that bonus depreciation is now going back to 100% and is being made retroactive to January 20th of 2025. And that, unfortunately, is not permanent. I would have loved to have seen that permanent, but that is set to sunset at the end of 2029. So we'll get 5 full years of 100% bonus depreciation for the next 5 years. So that is very good news for business owners. There are some new deductions and new credits that are becoming as part of this bill. Trump's platform was basically on 3 things: no tax on overtime, no tax on tips, and no tax on Social Security. So the question is, does this bill address those 3 big things? And the answer is yes and kind of. So the tax on tips and overtime, there is going to be, or they're working on having that deduction be added to the tax return. So if you get paid overtime or if you get paid tips, you'll actually be able to take a deduction on your tax return for the overtime or tips that you received. This is capped at $10,000 for single filers, $20,000 for married filers, and it also only applies for 3 years, 25, 26, and 27, set to sunset in 28. So it has a limited application. The downside, the side that's probably not talked about on this, is that even though you're getting a deduction and you're not paying income tax on overtime or tips, those are still included in your W-2 and you're still paying employment taxes on those. So we're not getting rid of employment tax on overtime and tips, but just income tax. The Social Security is kind of interesting. There's some laws out there that don't allow them to make Social Security not taxable. They just can't really get around that. So instead of not making Social Security not taxable, they've decided to increase the standard deduction for married couples or for seniors. And it's they'll increase it to $4,000 for those that are 65 plus. That also gets phased out. If you make $75,000 if you're single, or $150,000 if you're married, then it will start to phase out after that. So your lower income taxpayers will benefit from that deduction. Then that's similar with the deduction on tips and overtime. That only applies to people making under $160,000. So anybody over that, there'll be a phase out of those. There is a brand new deduction that I have never seen, I don't think has ever been allowed in the tax code ever, and that is auto loan interest deduction. So if you go out and you buy a car and you have a loan on that car and you are paying interest on that loan, they are going to make that interest deductible subject to certain requirements. One of those requirements is that the vehicles have to be assembled domestically in the United States. And there'll be a list of vehicles that applies to. The interesting thing here is that this is not an itemized deduction like I would have expected it to be, but it's what they call an above the line deduction. So that means that even if you don't itemize, you will still be able to get this deduction on your tax return if that bill is passed. Another interesting thing is that there's what's called MAGA, M-A-G-A, MAGA savings account. And it's basically like a federal baby bond for children that are born between 2024 and 2028. So for the next 4 years, we'll see this special savings account that you can set up for children. We'll get more information on that as they look at passing that bill. They're also getting rid of some things that have been popular with people. Clean energy tax credits are going to be revoked to offset the new tax cuts. And the EV tax credit, so if you go out and bought like an electric car, like a Tesla or something along those lines, they're looking at ending that in 2025, except for certain manufacturers. So that might still be around in limited cases, but they're looking at getting rid of those credits to fund some of these tax cuts. And the big thing out there, again for business owners, is what's called the SALT deduction or the pass-through entity tax deduction. This was what allowed a business owner to deduct their state taxes as a business expense rather than be subject to the 10% or the $10,000 state and local tax cap. They were originally looking at raising that to $30,000 for families that were making under $400,000 during the year. That was a big area, big issue, and part of the reason why the Republicans have shot down this bill so far. They want to see that expanded to be even bigger. So that's an area that's under development. And like we mentioned, all of these things are under development. We'll bring you updates as we get them, but at least we have something that we can start to view and look at and see where things are headed. This will be an interesting year to show how tax legislation kind of goes. So this is our first draft of what we saw. We're going to get other drafts as things go through things. So make sure you subscribe and we'll bring you those updates as you come. And if you go to our website, taxtutor.com, you can sign up for our weekly newsletter and we'll make sure to bring you those updates as they come each week.